Good afternoon, Market Chameleons, and everyone joining us for the first time. Thanks for coming by and watching our Market Chameleon After Hours show with Ryan Mastro from OptionsRobot. Before we get started, let's take a look at the shared disclaimer. Please be aware that neither Market Chameleon, OptionsRobot, Ryan, or myself are registered investment advisors or a broker-dealer. If you're searching for investment advice, please reach out to a licensed professional. This webinar, as all our webinars and shows, are for informational purposes concerning Market Chameleon and OptionsRobot tools and products. With that, one last look at the disclaimer, and let's welcome Ryan to the show. How are you doing, Ryan?
Doing well, thanks. How about you?
Great. Let me share your screen. Doesn't seem to be added to the stage for some reason. There we go. All right, perfect. There's the Market Chameleon landing page. So what are you seeing today?
So it was a pretty good day. I mean, let's take a quick look at some of the charts here and look through what's going on. I mean, QQQ, I think you look at that. I mean, to me, what I see there is a nice triangle. Basically, the lows getting higher and the highs kind of getting tighter and tighter. So, poised for an explosion here to the upside, and it's happening across the board. Spiders look a little bit better. IWM really looked good. That's kind of breaking out already. So that means breadth is starting to improve. That's a good sign. Your diamonds looking the same way, almost poised for a bigger breakout there. So, I'm pretty positive here that the market's going to continue to move higher, barring some news, right? And that's the problem. We have Iran that Trump's talked about. He's already kind of done some stuff with Venezuela. You have this whole Greenland thing. What's going to go on with that? So I think that's on the radar. We had some negativity from Powell over a video this weekend, came out yesterday, kind of calling Trump into question about what's going on with him being investigated. So, basically saying that there's supposed to be some independence. There's a letter that was circling around, and they had all the former, bank heads that were important, right? All your big names that are thrown on there, trying to add credibility to it. But push comes to shove, Trump's going to keep doing what he's going to do. So I'm not really seeing any difference there. But I think for the most part, I mean, there's some really interesting plays that from a technical perspective, something like the XLK, and we're not really seeing a tremendous move in there, but I think that's poised for a pop. Like, it's kind of sitting here, keeps hitting against resistance. If this market goes, that may be something that, we jump on and look at in terms of, pop to the upside, start to play for, the high back at here. That leads into the gap, play for the next high. I mean, that's sitting near all-time highs, right? And that's sitting up here looking good. But, we're trying to capture this wave to get back up and through levels if we pop on everything else. Now, I think the other big issue is breadth is improving. That's good. But we're not necessarily seeing that out of all the big weighted names, right? We're not seeing a Microsoft that's up near highs. We're not seeing an Apple that's up near highs. We're not seeing a Meta that is up near highs. We're basically looking for maybe Amazon, it's kind of back up there, and Google are the big weighted names that are there, right? They're the ones that are near the highs. So those are probably the ones that I'd be playing and looking at from a perspective of the volume, maybe the UOA that comes in. Obviously, Market Chameleon does such a phenomenal job on that. So, maybe you look at something like a Google doing an entry bot using the high of the day, and we just say greater than, and the high of the day. Let's just look at this real quick from a daily perspective and look at it from a candle perspective, and we can zoom in to see high of the day is 334.03. So again, if it starts to break out from there, I would want to be ready with an entry bot to give me that breakout. I'd probably play maybe the out of the money, slightly out of the money's here, because if it's at 334, I'd rather play probably 335s just from a cost perspective, because they do get a little expensive. And I'd probably do quick. The quick allows me to work the bid-ask spread and just click create. And then obviously from what we do here at OptionsRobot is create these templates. You can create your own, put out however you want to do it, but something like this template would show me, and now I have all my orders set up and ready to go. So if it moves up by $2, I'm going to roll. If it pulls back by more than 30%, I would get out of the trade. So I'm going to keep doing that until I feel pretty comfortable with it. And this has three rolls for $2. So again, if it moves up by $6, I'm feeling pretty good about it. And I think we could easily get something like that on the tape. Now, let's come back to Market Chameleon and look a little bit here at some of the stocks that are hitting today. Silver clearly is on everybody's radar, right? This was a very large move today. Silver popped on the futures. They popped from a close on Friday of 79.79 and got up to 86.34 today. So that was absolutely phenomenal. And clearly you can see the volume coming in on the Silver Trust, which is SLV. Netflix, I think there was some positive news over the weekend or this morning, basically talking about Warner Brothers rejecting the deal from Paramount. So this still has to go forward, but Netflix could be on your radar in terms of trying to move back up. Now, the only problem I see with Netflix is that we're going to have earnings on that here. And I believe that's going to usually be not this week, but next week. It's not the first week of earnings, usually second. So let me just double check where that is. That's on 120 after the close. So that puts you out about here. So again, if you're looking to acquire and start to build a position, again, you have to make that decision if you want to be in for earnings. Some people like it, some people don't. Maybe you start to build a position, you start to say, I'm going to buy a little bit here, and then earnings come out positive, I'm going to start to add to it. So you're adding and getting something on the tape. So if it goes down, you get to add to it. If it goes up, you get to add to it, but still you have a small base position, maybe like a quarter or a half a position that you're ready to go. So Netflix definitely on my radar in terms of what's going on. Now, we did have this ONDS. I just can't fathom the volume in here. It just keeps getting bigger and bigger, but it's just massive numbers, and they just keep trading it. So I think it's just more of a trader than anything else, not really getting me that excited in terms of news. Now, this week we're going to have a lot of the bank earnings, so I'm shying away from playing the earnings. So if you like the banks, if you like playing earnings, then that may be something you want to jump on in terms of some of those names. ServiceNow was interesting. The only problem with it, it's very thin in terms of trading, so I usually shy away from that. But that's gotten better, right? If you look at ServiceNow in terms of the options, the only other problem we're going to have earnings in this one as well. But the options, because of the stock's been split, the options aren't as bad anymore. So you can get into this thing for a fairly price. But let's just look at the chart on this thing, and it just doesn't look good, right? It's been down and keeps dropping. If I zoom out a little bit to show you, we've been in this horrible looking trend. It's just been down, 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 and that's with the split involved, right? So our high up here was like 2 and change, and we're sitting here at like 142. So maybe you want to wait till post earnings. Earnings are going to be, I believe, on 128. So maybe something like that would be post earnings. And you say, you know what, we can get a bottom formation and start to play that. So this one I'd probably shy away from in terms of the, even though it's got UOA, it's just a little bit thinner in terms of the volume, not really that great. Now, again, AG is one I'm in for the silver. I have Hecla. We have, let's see if there's anything else in here. So Hecla, EXK. I don't have any SLV. I have PSLV, which is a straight up stock. Doesn't have options on it. There are a couple that do have options on them, like SLVR, or you can get into some of the junior players like SILJ. So just some other names there for gold and silver. PAAS, Barracks, AG's been a good one. Hekla's been my best, right? That's one that's just been absolutely on fire. So that keeps going. Now, the last one I want to talk about on this screen is Capital One. And Capital One, they all have gap downs today. So Capital One, Visa, MasterCard, and for those of you who didn't see the news, basically Trump is attacking all of the credit card companies that they are gouging the American people with their interest rate. And he said there should be a cap of 10% versus some of these guys doing 20, 22, 25%. It's just outrageous. So Visa basically sold off and basically started to move back up a little bit here. MasterCard, American Express, just a couple of those names that are on the radar there. But Capital One was one that came in, looked a little bit better, and we had the paper in here, so you can see somewhere in here. I saw it. This one had some unusual options activity. They're saying bearish. So again, is it puts? Is it puts and then they bought stock? So these are the things you kind of have to make that decision on. Last one I'll talk about real quick is this space here, SanDisk. And these guys have just been absolutely on fire, SNDK. Now, it's very difficult to trade, right? It's a $389 stock. Options are, kind of wide, kind of a little bit thin. So bid-ask spread's a little bit wide. So it's very difficult to trade. So if you look at the at the monies, you can see you're about $1.20 wide, and it's $19 for the at the money. So again, if you're going to play something like this, I would recommend doing like a butterfly or a call spread that you feel comfortable with. Call spread means something like, all right, if I wanted to buy maybe the 390, 410, right? So I'm not laying out a ton of money, and I may even go out a week, right, just to get myself a little bit more vig on the out of the money call. So if I looked at something like the 290s there, it's like $26.50 if I bought the offer, and I went up to the 410s, it'd be $16. So it's not really my kind of cup of tea. It's just a little bit expensive. So I'd probably be looking at something like a call butterfly or a condor to try to bring that number down. The other side of this, if you look at the chart, how awesome that is, this has just been, on fire, right? That just keeps going. Now, you do have a couple names that could be laggards, like the WDC, only a $212 stock, or an STX, which is, roughly the same. So I should say right in the middle between the two, it's $321 now. So they get a little expensive. Maybe you want to play the WDC. I mean, this is still moving about $13 a day. So you're still going to get probably an option that's $7, $8 in terms of an at the money option. So let's just take a quick check on that. At the money options for this week, this should scroll down to it. Yeah, you're about $7.75. So again, this may be something you want to maybe go out a week, give yourself some time, play a call vertical or play a call butterfly on something like that. Now, just to come back into the scanners over here, in terms of screeners, again, I just want to kind of come through some of the volume. Big volume in here obviously is always great. Excuse me. And you want to see where that volume is. I mean, ASML has been awesome. Obviously, MasterCard probably had, really good volume, because that Oracle had a really good move as well today. Let's look at that on the chart real quick and just show that. And Oracle, I like because of the way the pattern looks. We had this gap down. Let's go back over to charts. We had this gap down. I'm trying to zoom in for you a little bit on this one. And so the big gap down here on news, and now finally it's starting to have this clearance trade where you clear out a lot of this resistance and start to really build on something. Now, I'd like to see it on really good volume. Looks like we're a little bit lighter today, but not the end of the world on that. So again, if you start to look at something where you have the clearance, maybe this is one that's going to be cheap enough. Implied volatilities come in. We've kind of worked that magic. So maybe this is one you look at. And let's just do it real quick here. So what's the high is, let's see, 206.59. So let's just do a entry bot. We'll do Oracle greater than, we'll do 20, I'm gonna do 207. All right, current 204. Yeah, 207, 206. Yeah, I'm fine with that. So it's a little bit higher. And have it break out, right? That's really what I want to see. So I'm going to do add option. I don't want to do that, actually. I want to add this one. We're going to say 207.50s, and then I'm going to do the quick. Now, depending on your outlook, you may want to do something a little bit different in terms of how aggressive your rolls are. Where do you want to be? So we have a couple different ones in here. This one's for $4. The other one's for $2. I think I have another one here for $3. So these just set up. So if I do the $4, what this does is similar to what we did before, and it's just going to roll me up every $4 with, again, a trailing stop on this thing. So it basically allows me to continue to work that magic on those. So there's another idea and opportunity there that I think we could latch onto. Now we've got a couple of minutes, and if there's any questions, I can tackle them, or I can kind of find another idea.
We did have a bunch of things both from this morning's show. People gave symbols they wanted to look at, and we have some live people on who have some questions from this morning. Someone wanted to ask about Walmart, WMT.
So Walmart was, I don't remember the index that it went into, but I believe it was going into an index today. It looked pretty good. So I think all of these names, Costco was running, so that was looking good today. We had traded that one of our services, and then even Target, I think, was doing okay after selling off. So Walmart, I don't mind at all. I think it looks good. I think you're sitting near an all-time high on this thing. This has just been, you can see, you know, I have nothing back here. So this is a, whoops, sorry, zooming in here for that, grab and bring it back over. So something like this, you probably have to do a Fibonacci because there's no resistance areas. So let's see if I can grab, let's see if I can do this properly. So this is going to give me, let's see, something like that. So we look at that, you're going to be looking at, that's not what I want actually. That doesn't give me the how I want to look at it. So let's do another one. And this always messes me up because I chart on different packages here. So it's, is it this one? I don't think that's it either. But let's see. Nope, that's going to give me retracements. I don't want that. Maybe I was on the right one. So if we use something like that to there, no, I guess that is the right one. Just it's about the prices then. So after that, we'd be looking at something like one. So if we break out through the high, I'd be looking at levels around 120, 119.89. That next one is 120.89. Next one after that is 121.94. So there's a couple levels for whoever was looking at Walmart.
Perfect. The next one is a symbol I'm not familiar with, QDTE.
QDTE, Round Hill Innovation. No, I don't know it either. Let's just take a look at the chart, see what we got here. One, I'm always curious because I see something like this. I'm like, all right, looks good. Kind of that clearance trade. You had two big gap downs. I don't know the news. I don't know the stock well enough to comment on it. Does it have options? That's always a good question. So it does have options, relatively cheap because it looks like it's a, but let's look at the stock price here. You know, $32 stock. It doesn't look bad. Let me get rid of the volume over here so we can see a little bit better. So I'd want to see some clearance here. I want to see kind of take out the high and then play for the gap fill. So it's not that big of a, you know, it's not that big of a stock that doesn't move around a lot. So maybe you get through here, you're going to play for the gap fill. That's only 32.26, right? So there's a lot of small numbers in here. So it's not that big of a mover. And then you can kind of get through there. Then you're going to be playing for maybe the gap fill over here, and you have all the moving averages up here. But I think it's a good play because then you could just say, well, I can use this as a stop, right? It's not that far away, you know, and say, all right, if it takes out the lows, I'm in something. If it takes out the lows, I'm just getting out. My only warning on that is I don't know the stock enough. And if there's gapping down, does it have something in the news that it could gap down again? So that'd be my only kind of concern about something that I don't know that well.
Perfect. Next one is GDXY.
GDXY, and this is a yield max one. This is, again, I think you're playing this for slightly different reasons and why you're doing it. So you're trying to get the yield out of it. So this typically won't move as much, right, in terms of that. So I don't mind something like this. I don't know what the yields are on it. Typically it's something you're trying to get have this thing sit here and, bring in income with it. So I don't mind this at all because I like being in the gold. I just don't know how much yield. Maybe if you're looking for it from a yield perspective, you might get a better return in some of the other names because gold miners aren't going to be pushing off much yield. And unfortunately, the options, well, I shouldn't say that. They're getting better. The options are getting better in terms of what you can collect in terms of the premium. But there may be other tech related you're going to get a bigger yield on. So if you're going to be diversified, I get it. But I wouldn't be my only one I'm trying to get my yield on. But from a perspective of you can get yield and potential appreciation, I like it. Theoretically, this should be moving a little bit more with what's going on in gold if you're playing that. Now, you don't want to have gold like rip up, right? Because then they're not going to make as much money in terms of they're going to have their options kind of not work as well. But so again, I'm kind of indifferent to this one, and that really depends on the reasons that you're in it. But I like what it did today. Obviously gapped up today with what was going on in gold. So to me, it's a win. And if you're able to get a good yield off of it, then I think it's a double win. So I would stay in it. And probably if you're in it, I can't really say any reason to get out of it, right? Other than as long as you understand the risks that you're in this symbol like this with this company.
Perfect. We had a question about SLV silver. Is it still actionable or is it too overextended? Was the question. So I don't know.
No, so I'm still, I don't know, call me a perma bull in silver right now, but I think, look, it's overbought, right? That's obvious. It's gotten overextended. But I think what you want to look at is all the fundamental things that are going on there that I've talked about over the past couple of weeks. One, China basically export controls, US export controls, more of the traders that are standing for delivery where we've never had that. You're talking about millions and millions of ounces that people are standing for now. We've finally seen the spot price in Europe go to 100. So we got a very big differential between the price of silver and the spot price. Asia, the spot price is even higher. A lot of people discount that because it's not as kind of a liquid as exchanges. So, but spot prices over there are up like 130. So we've never had such a divergence between spot price and where we are in the US. And I would call last week's sell-off kind of twofold. One, a bit of shenanigans that institutions trying to push this thing down. But two, you also had rebalancing. So rebalancing some of these ETFs and indexes or indices basically caused some selling to go on that, again, I think institutions took advantage of. But now I think you're starting to see some news stories come out and saying there's massive institutions that have to cover. So I think the short squeeze is going to go even higher. And what we do with options, if you're in this, I would definitely consider rolling your options up, mainly because if you can roll your options, right, that takes a lot of the risk off the table. So for example, if I was in something like, I was in Hecla. I'll give you an example of me personally, what I did. I was in Hecla and I was back in here since July. So down in here, I bought the 4.5 calls. I finally rolled on this day in here and I rolled up to like the 22s, right? So I'm in something out of the money. My options are not in the money and I bought myself more time. So if it keeps going, great. If it doesn't, I know what my risk is, right? So I'm defined on my risk. Even if it does pull back, I have time for it to be able to kind of continue to kind of bob and weave, but I still think it's worth staying in all these names. In fact, I'd probably be adding some of the smaller names, smaller miners, the juniors, any of those you can get your hands on to have silver. Because I think, and again, I had a 5-step plan. We've already knocked off a couple of them. One was US was going to go, basically ban exporting. So that was one that hit. Two was that you're going to start to see companies go directly to miners and make deals. So that's already happening. That's going on right now. You're seeing that. 3, the next big thing is some kind of default. So if we get a default from either US or London, then that's going to be a big thing. That's going to keep prices going higher. You may get the other 4th one is basically having a big institution basically show their loss and have a problem and show that they had to cover. So that's going to be a sign. One guy does it, one big name covers, everyone else is going to have to do it, right? You're going to get this kind of watershed moment. I think that's going to drive higher. And then, last thing I think that you really want to watch out for is mergers. So that's where I think is where you want to be watching is play some of the smaller names, because a lot of these big boys that have really good margins now, they're going to be going to look to buy some of the smaller miners.
Perfect. We had one I think is maybe a gold miner index. Well, Baba is another question, and K-Web is another question. I don't know if you mentioned K-Web. I know you've mentioned it before.
I know you guys have had some UOA, excuse me, UOA in that. So that's probably kind of intermingled in what's going on in these Chinese names. So Baba, great couple of days here between last Thursday, Friday was kind of blah, but now on the chart pattern, this just looks awesome, right? You're really in here poised for bigger moves. My next couple of resistance, I'd probably be looking at that swing high there. That's 170.55. I got again, something like this that's an ADR. You basically have these the gaps, right? Because it's moving, in other countries where it's trading, and then it basically open up. So you always have that kind of a potential for gaps. So I'd be looking for the gap fills, right? So this low here is 173.78. Then this low here is 178.09. So that's my next couple levels on that one. And KWeb, we've seen, you know, some paper across the board on this one. So it's been looking maybe not as good in terms of the last couple of days, but big gap up here, taking out that orange line, which is the 50-day. I'd be looking at the swing high over here, which is 38.22, and then the 100-day, you can see that number over here, which is 38.70. Again, doesn't move as much, is not as big of a mover, just because of the stock price. But then the next big high over there would be like 40.10. So hopefully we can kind of work our progressions up through this wall of worry back here, take out swing highs, and, you know, ultimately getting back up to something like that 43.37 high back there.
All right. So you looked at Baba, KWeb.
KWeb, both of those.
Yeah, I don't think we have any more. We only got 4 minutes left. So you want to? Are we still having the deal for the Chameleon communities?
Still live on that one. Yep. I basically think I have that.
2026 MC.
Yes, sir. Yep. So again, what that is 2 months free, allowing you to really try it and get into the nitty gritty. If you like it, then again, you can connect to your broker. We're working on brokers, as many as we can at once here, to get them all connected. Right now we have Thinkorswim, which is through Schwab. We have Tradier, and we have Alpaca. We're working on some of the other bigger names that some of you guys may be using, but the end goal is to get connected to all of them and make it easier for everyone to trade, right? I mean, the end goal for me when I looked at this and we created this was, you know, we were looking kind of selfishly as a kind of trying to find a way that we could trade throughout the day, and because we're so busy with other things. So it basically allows us to trade during the day and not have to watch it. I know where it's going to get me in, I know where it's going to get me out, and where I know where I'm taking profits off. And it just allows me to do trading. So we created it and made it as easy as possible for everyone to do the exact same thing.
Well, and if you have that problem, everyone has that problem. I mean, that's the problem in the marketplace, right? Is most people who want to participate have jobs, right? And it's something they want to do as well. And this allows them now to do their research, put in their orders, set things up the day before, night when things get hit and triggered, the next move goes on. And this is what everyone has been looking for.
And you think about it this way, think about it like we don't really talk about a lot about premium, but for a lot of people that aren't so aggressive with maybe day trading or, you know, trading some of these directional moves, swing trading style, and they just want to collect premium. To me, this is such a big tool for premium collection, because you can say, all right, I want to do this. If it gets up to my short strike, I want to take it off, and I can roll it out and just keep rolling it out to like 30 deltas until you're basically, you know, comfortable with your risk. So I love it for that perspective. I have so many different positions on, and what we're seeing is people realizing that once you can automate it, you can actually do more, right? You can actually add more and allow this to bring in a lot more of that yield, right? You know, someone's talking about that yield max strategy, and that's what that is. It's basically allowing a system to work in your favor. And that's what we do with the premium. Allow it to work in your favor and allow it. You don't have to be sitting there at the desk all day long.
Yeah, just so you know, one of the chameleons, you'd asked what the yield was on that QDTE, and it's 60%, what they said.
On the QDTE?
Yeah, that's what Jim said. He said the yield is 60%. I haven't looked into it, but that's when you asked, you said you didn't know what the yield was.
Well, QDT, no, I don't know it was QDT. I think it was the other one. It was the
the yield max product. Yeah.
GDXY, right?
Yeah.
So yeah, I mean, that's pretty impressive. You're at 60%. It's for a $17 stock, right? That's a good number, right? That's not, it's not pennies. It's, you're talking serious dollars there. So yeah, if you can get that out of it, then it's definitely worth holding and probably trying to add to it.
Yeah. All right. Great. Another great show, Ryan. Thanks for bringing this to the Chameleon community. Thanks for the offer. Again, that offer is Start 2026 MC. When you go into OptionsRobot, that's how you get the 2 free months to give it a roll. Great job, my friend. Listen, next week I am away on vacation, so we're 2 weeks away from when we'll see Ryan again, everyone.
Enjoy it. Have a good one.
All right, Ryan. Thanks, you, my friend.
Take care.
Bye. Hey, everyone. Thanks for joining another webinar series with Ryan Mastro from OptionsRobot. Remember to check out OptionsRobot and take advantage of that. I mean, to be honest, with all the things we've done with other people, this is two months trying the product is a great deal. So that's Start 2026 MC to give Options Robot a try. Everyone, thank you so much. Remember, thumbs up, like, follow, and hopefully we'll see you tomorrow morning. Dimitri and I go live at 9 a.m. Everyone have a great, safe day, and we will see you tomorrow. Bye.